Good evening, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up. And this wrap-up is for Tuesday, the 14th of September, 2021, and we're in the evening. Let's leave it at that. Wow. Apple down about $1.50 as I saw it the last trades of the day. The market did see the release, but the NASDAQ hung in there for a while as the Apple release was going on, but wasn't enough. And the market let go by the end of the day. You can see Amazon back down again. Tesla's the market that's staying up. Home builders down a little bit with the XHB. You can see that the gold market up a little bit today. Why? Okay. So what came out was the CPI this morning, and let's hear one for the transition team, because that's how the market looked at it. The market was looking for a hot number, not as hot as the month before. It was looking for about a 4% month over month, and that's a 0.4% increase month over month. We're not living in a crazy area at 4% a month. 0.4%. It got 0.3. And if you dug down into the core CPI, instead of the 4.2% of year over year, it's got a 4% number. So you got to pay attention to what's going on, where this is taking the market, and what the market thought. Interestingly, the stock market rallied off the news initially, and then it started fading about an hour and a half into the morning session, and it just started rolling over. And I said to myself, it's more of the same. The market's in a corrective phase. September is an ugly month often, except that you're at the 15th. I don't care if the market takes off from here. The first half of the month has done damage to traders, to chart patterns, whatever you want to think. Where it ends up from here, I don't care, because the market's done its damage. Now it has to rebuild. You're getting what I'm trying to make a point of. When you look at ARK, that's not so pretty. Is the market going to come down here and finish off this gap? It had filled this gap here with this one reach, and then it went back up. Now the market acts like it wants to reach down even further and maybe fill another gap. What's the trend? Bearish. One word. Lower highs, lower lows. What else? The market is underneath all the key averages. Here's the 200-day. Here's the 18, and here's the 100-day. So the next support is obviously the Bollinger Band right here. Now there are other supports, and I show them to my traders at my subscriber video. This is the free video. These are on YouTube. My subscriber videos are certainly not on YouTube or anywhere else on the internet that the public can see them. You need a user ID, a password. They're locked up. And I show way more than you're seeing here. But there's another support in front of that I'll be looking at in the morning. Trend down, bias down, and oversold. Let's assume you don't know where the window envelope is. I'll still hang my hat for the time being that professional traders will take money off the table at 114.69 solely because if they have built into the market Bollinger Band type theory, that the market doesn't stay out of a Bollinger Band above or below it more than 5% of the time. The first time you hit it, especially in an oversold condition, you act. To learn this, I have a 13-part video series. Go to our website under the word education. When you look at Apple, this doesn't look like a stock where the market was enamored with the product. You know, it was interesting. One of the things that Apple said, and I watched the whole release. I love their products. And I saw that the phone, it's going to come out later this year. What's that mean? You can buy the phones right away, but the watch later this year, does that mean you can't get it for somebody for Christmas? What does it mean? It was interesting, and I think the market picked up on that too. But the market wasn't enamored with this. You've seen other releases where the market drops off it. It was anything they did earth-shattering? It was not. Do they have new products in the sense of better phone workings, of a better chip, of a faster chip, a little more there? Yeah. But I didn't see anything about that docking where it says, hey, here's your docking and here's your charging way. I was looking for that. There were disappointments there. I don't think I was the only one looking at it, and that's what I was looking to see. Although I buy a $7 charging pad, if you call it that. It's a round thing. It lights. It's cool as can be. I sit my phone on it and it charges. I love it. You know, and that's when I go to sleep. I just put it next to the bed and it's charging all night. The alarm goes off in the morning and I'm set. Lower highs, lower lows in the pave. First challenges of the 100-day average in the Bollinger Band. I'll walk you back here. Yesterday's low, 26.33. Now you're right there on everything. Okay, you can go lower, but I'm not betting on it. We know why this market is set back. We know that there's going to be a huge fight over the infrastructure and the reconstruction bill that they want to get in. And we've seen the pared backs tax bill. You haven't seen anything. Those are the opening salvos. Everything gets cut down from there, not goes up. You're not going to take their proposed capital gains, if it's, let's say, 25, 26%, and kick it to 30 now. Their proposal's your high number. Doesn't mean it won't stay there, and it doesn't mean any of this gets passed. Two-part problem. We still haven't talked about the budget, and that's got to get passed, so there's a lot of horse trading going to go on here. But you don't have to deal with that until October. And when have you seen Congress do something without getting to the last minute to get anything done? Let's face it, folks. All they are good for, all of them, both sides, Republicans, Democrats, are fighting with each other. Lower highs, lower lows, market going down here. I get it. You're in a downtrend, and that's your industrial sector. So some point it'll end, but I think that when you close under a Bollinger Band, which you did today, I don't expect it to stay under it. I expect that it can hug it and move either side. If it hugs it and keeps hugging it, we call that the gorilla glue trade. This market does not have a recent tendency to do that. It has more of a tendency to get up to the band or down to it and turn away. So pay attention and always understand the nature of some of the markets you're looking at. When I'm looking at the semiconductor, I still like these. Now, I want to come over here for you, and I want you to look at the numbers. Both numbers today were over 80 in the slow stochastic. The red one's called K, the D, right through here. Yesterday we're both over that, not the day before. Tomorrow determines if the market's going to embed. So tomorrow's the key day in the market. You need 3 days to embed. We'll see if it's capable to do it. Most times, this market, when it has a chance to do it, has been doing it. So, not saying it has to, but again, study the nature of the market. Podex, it's gone to hell. So as people used to say, if you smoke, you're going to go to hell. Well, the price has gone to hell. What can I tell you? It just keeps coming apart, and it's laying on that Bollinger Band. That's the gorilla glue trade. I was prepping you for this. And it has a tendency to do that. See the difference? You always look to see what kind of chart action. You don't have to be a student that much. Just understand what you're supposed to look for, and that's what I try to teach you in the charting courses that I have. And, you know, this all leads to it. Trend down, bias down. I can see short covering. I can't see anything else. Why would anybody want to buy that? I mean, where you're wrong. That's the first thing you always have to know, where you're wrong. In XHB, lower highs, lower lows. Housing, interesting to me that housing went down today as we saw the 10-year note come from yesterday's 133 to just shy of 126 today. It finished around 128 and a quarter, right in that range. It is oversold. I'm going to look for big support right here, 74.73 to 96. And again, if one's bearish, I think that you're on borrowed time at that number. XLE, no trend. So in the energy sector, we have a higher high right through here, lower low. I was pointing wrong there. And both numbers, you got a lot of action here at the 48.08 level. That is the combination between that and the 200-day average. The 100, did I say that? The 100's up here. That's the 200-day average. In the emerging markets, okay, an outside day down. To get this market catching the people that don't believe in it, you got to take out today's high, tomorrow, or the day after. That high was 82.05. If it does it, I'd look for 82.57. Not a monster trade, but if it sinks away from here, watch out. You're probably headed back to the 18-day average of closes. In gold, you're back into all this resistance. This has just been a son of a gun market that's disappointing. Do you remember back here, I made a statement to you, what a disappointment. This is when gold went up and broke. I think it's going to break your heart again. So I don't think I see anything here to get all crazy about. At best, you're caught in the Bollinger Bands, and at worst, this is a failure, and you can go down again. It's not throwing out sell signals. It's just a disappointing market. Gold miners, you're just hanging sideways. There's no action. Why would the miners go up if the price can't hold? That's the first thing you got to ask. Yet price doesn't drop much, so that's why you're getting this sideways action here. TLT. So this is what you looked like 2 days ago. The market had hit the lower Bollinger Band. What do I teach in my enhanced Bollinger Band course? The market comes back, so suddenly you have higher lows, higher highs. You're over the 18-day average. If the market, and this is Monday, in order to break this trend, you got to get back under 148.10. If the market can go up, a potential target is the upper Bollinger Band, wherever it's at. What do you do the first time you hit the Bollinger Band and you're not embedded? Not going to keep saying it. FXE, flat market. Momentum down, prices refuse to get under the 18-day average. It's trying to make a statement, but doesn't have the wherewithal just yet to do any of that. So I put it all together. I'll just come back here, and you can see how the markets are just sort of finishing themselves out. You know, at 9 in the morning, I used to do this a little earlier, and now I've put back, I start recording about 9 every morning for this paid subscriber video. You know why? So many of the government reports come out 8:30, 9 o'clock that impact the stock market. So I wait for them to come out, and then I give you what's going on. On weekends, we do weekly charts. Every Saturday, it's just longer-term chart for those subscriber videos. Cover 40 of them, giving you a game plan that's good for 5 days. I'll update it during the week if I think it needs updating. And these are just some of the charts that we cover. I'm always adding, like I just added Amazon, so you got your Apple in there for my paid subscribers and the other people. And you tell me what you want, and I'll bring them in. That's how I like to do it, and I do want to do rotation. I mean, each season I'll look at, should I be in housing? Should we look at auto manufacturers? And I do want to look at auto manufacturers when I smell that the semiconductor problem is coming to an end. But ahead of them, I don't know. They don't have product to sell. I'm not sure I want to own them at this point. I know why they went up, but now you got to ask where you're at in the cycle. So, $8.95. You get 24 videos a month, each 15 to 20 minutes long. Specific buy here, sell there. Here's the stop. Here's the objective in the market. Looking for that action. And no, it's not about day trading. It's about on the day charts following that. And on the weekly charts, you're not making moves other than typically once a week. So you're playing for the longer term. Find out more. Go to our website under the word education. We'll take it the rest of the way. Have a great day. I'm Ira Epstein.